All right, welcome back to audio number 4. Audio 3 was a lot of questions. I hope you put it on pause and went back and asked all of those questions to yourself and actually wrote them down. That's what the important part there is, actually writing them down, going through the process of planning your success, and more importantly, understanding where you are, how you're going to get there, and how you believe you can achieve that. So I guess really the question now up to this point is, are you ready? All right. Are you ready to succeed? What we're going to talk about now is, what do you do to prepare before you trade? All right. If you haven't traded yet, bear with us here. But if you have traded, take a moment to describe your preparation, or more importantly, your routine. Literally write it down, put it on pause. What is your routine to both game planning and prior to allocating capital to the market? Take a moment to describe it. All right, now welcome back. Are you consistent with this preparation? You do it the same time every day? You do it in the same way? Did you make worksheets for yourself? Do you use the same websites? Are the scans that you run already pre-made, and it's just a question of you getting in there and looking to see which stocks fit the strategy? If you're not consistent when you do your preparation, why not? Why not? I mean, winning, for all intents and purposes, is the science of being prepared. We spent a lot of time in the previous audio on talking about what part of the process is under your control, and preparing is under your control. I mean, top sports people, teams, businesses, top traders certainly wanting to perform well and perform well with consistency have long recognized the importance of meticulous preparation. I can tell you that it absolutely drives me bananas when I see traders coming in late. And when I define late, I mean anything past 8 o'clock in the morning, which leaves you at least 90 minutes to get ready for the morning. Now, that's high level preparation. Pre performance, when you get there early, enables you to execute at the highest level possible. And that's what you want, to trade to your full potential each time. You want to know as much as you can about yourself and the markets, coming in prepared, what happened overnight, any gaps, any news change, what's on my game plan. What do average traders and weekend athletes have in common? That's really a good question here. They both generally spend less time and energy on preparing to perform more specifically, than do the great ones, the ones that are exceptional, both traders and athletes. You only need to see, you go to the gym, you see the casual guys shake their leg once in a while, boom, and then they hit the weights. And somebody who's serious about it, somebody who really went there with a plan, you're going to see them warming up, stretching beforehand. And you're going to see the same thing with the trader. They're going to come in with a plan prior to getting to the office. And again, this is one of my big pet peeves also. You don't want to come in with, you don't want to do your plan after you get it. What if, let me put it this way. Let's say you don't do your plan the night before, and your commute is a commute from hell, and you don't get to work for whatever reason to the office until 9:15. Then what are you going to do? Sure, you're there before the market opens, but you just jammed it in 15 minutes before the market. Do you really think you're prepared? No way. A pre-performance routine is going to get you ready, and coming to the office to work on maybe making a tweak here or there is what you should be doing, but not to complete your whole plan. All right? Becoming a high performance trader, a trader who has peak performance, you're going to involve adapting and performing habits that most traders may get bored with or feel uncomfortable doing. Preparation is a key component of performing. There's no other way to say it. Keeps you in a feedback loop to understand what's working, what's not working, and it's essential for continual improvement and ultimately, as we talked about in the last audio, goal achievement. Let's actually get into the benefits of what it means to be prepared. We can give it all the lip service in the world, but what is the big deal about being prepared? Well, number one, it leads to consistency. Performance is ultimately an aggregate of all of your habits, and preparing has to be a habit. And something most traders don't understand is that consistency comes from being prepared. It comes from following your plan in a consistent manner. But more importantly to me, I believe preparation builds confidence. It assures composure. It ensures self-control if you have the discipline to follow it. For each of us, there's going to be some optimum amount of preparation that's required. That everybody's not going to have to do the same exact thing. We only need to know a small part of you that you're underprepared to create that doubt inside of your head that you're not ready to allocate more money to the market. So ultimately, you're going to have the control. Preparation is a part of the trading day of which you have full control. What you prepare, how well you do it, is entirely down to you. And quite honestly, I just mentioned before, composure, confidence, conviction, whatever you want to call it, let's call it composure right now. If you've fully prepared and you've done enough what-if scenarios, or more specifically, as I do with my private mentoring group in the Active Trader program, if-then. And this is something I want to walk you through here from a performance habit or performance expectation. All right, you absolutely must prepare the same way every single day. And if the plan is not unfolding in the market, you must plan to do nothing. You can't put on trades simply because you're at your seat. It's the fastest way to get 1,000 paper cuts and blow all your capital. So constantly you have to be saying to you, if the market does this, then I'm going to do this. If the market does this, then I'm going to do this. All day long. Good traders talk to themselves. And ultimately what this leads to is good concentration. Your preparation routine can and will be a trigger to activate your focused trading mindset. Now think about it. Tennis player bounces the ball before they serve. Pitcher will spit, whatever. A batter will grind, fix his batting gloves, dig into the batter's box, take a couple of practice swings. What's your practice? How do you concentrate to get ready? You're also going to have less risk if you're ready. If you're prepared and your plan is ready, you're going to have less risk because you prepared the risk as opposed to reacting to what's going on in the market. So first, you have to read through your strategy to be prepared, understand the big picture. Next, mentally rehearse implementing your strategy. We talked a little bit about visualization and mental pictures in the last audio, but mentally rehearse implementing your strategy. We've all read the books, going back to whatever, about the Soviet athletes and the East German athletes in the 1970s, early 80s, and the power of visualization of how they achieved on such a massive scale. They literally would practice sitting down without equipment on, just visualizing what they were going to do. Traders can learn from that. I'm telling you, I played a lot of baseball. There were many times when I was in the zone because I was in a zone visualizing the next pitch. I was in a zone visualizing where it was going to be. And then if it unfolded, boom, I was all over it. If it didn't, well, it didn't look like the picture I had in my head, so I just let it go. Jack Nicklaus said the same thing. The great golfer Jack Nicklaus said, I never hit a shot that I didn't see first in my mind. So you got to develop as many what ifs as possible as well. I want to see this, and what if it does happen? What if it doesn't happen? All right, so you also have to make sure that you check to make sure you're in a positive state of mind. Talked about this a little before. If you're a little angry or a little distracted from other things going on in your life, you should probably not be committing capital to the market. So that brings us up to discipline. What is discipline from trading? I know we mentioned it a little bit before, and whether we want to bring it into the trading vernacular or not, basically doing what you should when you should. But how do you define it? How would you define trading discipline? Well, let's get into talking about it as a skill. It's the ability to be consistent in the execution of your strategy and to follow your trading rules. Again, big part of trading is having that big list of what not to do. So you have to literally be disciplined to not do it. So technically not doing something is being disciplined. And then be disciplined in following your plan. So there's two keys or two parts of successful trading that we spoke about earlier. Having a strategy with an edge and having a probability mindset to execute that strategy. And then last, be able to consistently execute the strategy. So strategy, high probability, and consistently execute the strategy, which I mentioned before considerable amount of times as what? How did I describe consistently execute the strategy? Flawless performance. Right now, we're going to talk about the second of those, flawless performance. All right, we want to be disciplined, but flawless performance is a part of the process that you can control. But why don't we talk first about when traders lose their discipline? Because that seems to be the most common topic. Because look, let's face it, we've discussed over and over again that we all know the rules, we all know the charts, we all know the patterns, we all know uptrend, downtrend. Why do traders lose discipline? There's times and events where traders are prone to losing their discipline more often than not. The strategy, mental or emotional problems, situational issues, personality. Let's get into each one of them. Strategy. Not having a clearly defined strategy with an edge is obviously a way to not be disciplined, because you can't be disciplined to something you don't have in the first place. So that also ties in with, you can't have a pre-market routine if you don't have something to be routine in. So consistent trading comes from consistently being disciplined to follow your strategy. All right, you're also going to have a loss of confidence in your strategy and a lack of understanding of probabilities if you don't have a strategy. If you're just trading tactics, which is, let's say, a bull flag or a bear flag or a breakout, without trading those tactics within a strategy, which we discuss an immense amount in the Active Trader program. I know this is the free program. The Active Trader program, most of that program is designed around our trading plan, teaching you the strategies for the trading plan, and ultimately how to execute the tactics to make the trading plan work. So it's very easy to have poor execution or poor performance if you don't have a very specific plan. Another reason you might lose discipline, maybe you're just distracted from other stuff, or maybe just the market's quiet and you're looking for something to do. You lost your focus. You might be bored. The danger here is that you get bored and you trade just to do something, and not because the trading opportunity as defined by your strategy is in front of you. It's very, very important to understand when that actually is unfolding. I've seen more money lost because a trader's bored than because they didn't know how to trade. Another reason might be you're tired, fatigue, maybe you're overwhelmed, maybe you have something else going on in your life, and that leads to poor concentration. Maybe you didn't get enough sleep last night, maybe you had a really crappy commute. There could also be some emotional reasons that you don't have discipline. Maybe you're angry at something, you're frustrated that maybe your last two trades you let your losses get out of control, and then you decide, I'm going to make it all back on the next trade. Well, let's take the opposite of that. Maybe you have too much confidence because you just had a string of winners in a row, and now you decide to risk a little bit more than you normally would because you're overconfident. To me personally, I think being overconfident is a little more dangerous, because you get to the point where you allow yourself to lose more money just because you had some bigger wins recently. That's got to be a gradual progression. I think probably one of two of the biggest reasons people lose their discipline is they're unwilling to accept a loss. I think that's 1 and 1A to the next one that I'm going to manage. It's a common problem. You're not willing to take a loss. You're always going to end up doing, the cliche. You're going to let your losers run, and you're going to cut your profits short, and we all know it should be the opposite of that. And I think the other one where traders lose their discipline is they take on too much risk, which ultimately will get into the not accepting losses because they have too much share size relative to what they're comfortable with. And fear is another big one in there. Managing the trading position size, you can deal with that in any certain number of ways, but all of these things for discipline, they all come down to the same thing. Flawless performance should be your goal. It's very, very important. So, that's losing your discipline, but what is the ideal state to trade? Well, first, physically, mentally relaxed. Well, why would you be relaxed? Well, go back to the beginning of the audio. You're prepared. I can't tell you how many mornings I sat at my desk and the market's all over the place. And it's actually, believe it or not, most traders in the market will tell you the first 15 minutes are the most chaotic, the most volatile. Believe it or not, When you're prepared, and if you learn from me, when you're prepared, you should just be sitting at your desk saying, "Well, I know what I need to see, so there's no reason to be stressed out. I know what I'm looking for." Most traders have no clue on the open what they're looking for, which is why they're all messed up on the open. All right, so you want to be in control, you want to feel in control, you want to be calm, full of energy, and positive that your plan is good. Just a question of whether or not the market's going to unfold. Now, this is whether you're stock trading on an intraday basis or whether it's a long-term fundamental trade. You still have to go through all of this. You have to be confident. What you're doing should be effortless, and more importantly, quite honestly, it should be automatic, because there should be no thinking when the market opens. This is a very unique perspective, and one that I would love to impart to you. All of your trading thoughts should be during non-market hours to develop your trading plan. The only thing you should do during market hours is look for spots to execute your ideas while the market's unfolding. You should not be looking for new ideas when the market opens up. So really, to wrap this up here, from a discipline and mindset perspective, before you start to allocate money to the market, be honest with yourself. How am I feeling right now? Am I positive, alert, ready to go, prepared? Or did I have a fight with my wife, my girlfriend, my husband, my boyfriend? Did somebody spill coffee on me this morning? Is my plan 100% ready to go? How did I do yesterday, and how does that relate to today? Whenever you want to achieve consistency, you must first recognize what state that you're in and only allocate capital to the market when you are in a peak state of being relaxed because you're prepared. That's what I want you to write down. Focused, calm, simple, patient, prepared, excited for the market to open. Excited because you're ready, and then start to visualize what you're seeing and what you're doing. You want to have a positive performance expectancy because you're prepared. So, key to performing well in critical moments, or more specifically, when the market is chaotic, is to change your focus from not choking or not messing up or not losing money to the desired outcome that you do want. Place your thoughts and your attention on performance. I can't tell you how many people lose money because they're trying to not lose money. People avoid losses by trying to not lose money. Just slow down, relax, be prepared. You want to be known as somebody who performs during critical moments. But you got to remember, you can't outperform your self-image. How you see yourself, which is your self-image, your self-esteem, has a big impact on how you perform. Do you see yourself as someone who chokes under pressure? Guess what? What's going to happen? Or do you see yourself as somebody who's cool, calm, collected when it's chaotic? Well, let's talk about that. Why would somebody be calm, cool, and collected? Everybody, whenever you think about it, anybody who's a football fan automatically thinks of Joe Montana. Why and which one do you see yourself? Your self-image is essentially a collection of beliefs about what we think to be true about ourselves. They can be developed and they can be conditioned in your favor. If you admit that your self-image is your beliefs and your self-esteem is your beliefs about yourself, work on conditioning yourself to have empowering beliefs and positive self-talk. It's extremely important. All right, so competence is a key to confidence. Competence comes from learning from your experience, preparing, writing a plan, focusing only on those aspects of performance that are under your control, and then mentally rehearse being in specific moments and see yourself staying cool, calm, collected, performing well. I'm going to end it with that.